Welcome back. Amazon is reportedly considering deepening its ties with the AI startup Anthropic through a new multi-billion-dollar investment, a move that could hint at Amazon's broader approach to developing its AI. Deirdre Bosa has that in today's Tech Check. Hey, Dee.
Hey, good morning, Leslie. So Amazon, it's already $8 billion deep into Anthropic, right? But unlike Microsoft's deal with OpenAI, Amazon has little leverage. Anthropic, it's still 14% owned by Google. It's collaborating with Meta and others, and it has made clear that it wants to stay independent. So with more investment, Amazon's AI bet, yes, it gets bigger, but not necessarily tighter. The bigger picture here reveals a key strategic divide in how big tech is approaching AI, build versus rent. Now compare Amazon's approach to that of Meta's. Zuckerberg is burning cash to build models in-house and lock down top AI talent. The payoff is control and IP. This is a more difficult path, no doubt, but if it works, it'll give Meta the entire stack. Amazon, to be fair, it is building its own models, but by most accounts, they have not been competitive. They consistently rank well below GPT-4, Claude, Gemini, and others on third-party benchmarks. With Anthropic, the company is hedging. It's scaling a proven player while its in-house team essentially plays catch-up. It's building custom chips for Anthropic, designing data centers around their needs, even embedding Claude into products like Alexa. But again, no guarantee that Anthropic stays loyal. It can still date around. Now, the risk to investors is that Amazon is scaling a partner that it cannot lock down. At least in the Microsoft OpenAI partnership, Microsoft secured exclusivity and got ChatGPT's growth to flow back into Azure. Even that, though, has turned messy with OpenAI diversifying, pushing to commercialize on its own. So for big tech guys, this is really kind of like a real-time A/B test, but for the AI era. So far, the market has been rewarding narratives. We've seen that with Microsoft. It got credit for partnering early with OpenAI, still getting credit. Meanwhile, Google, it has gone all in on building the entire stack, but it hasn't gotten the same kind of love from investors. It is still early, though, and certainly what I hear in tech in Silicon Valley is that the value may ultimately belong to the companies that own the foundation, and this is a longer-term play by the ones that are developing their own in-house models versus an Amazon that is hedging.
Dee, is the benefit there purely just capital gains, or is there something more that they're able to generate by being an investor, even if it's a minority stake or putting a bit more into these companies that they wouldn't be able to get if an Anthropic were just a normal, regular way vendor for them?
The capital gains question, that's a really good one, right? Because we've seen these darlings like Anthropic and OpenAI just accrue value in private markets. There's so much money for them to be raised. But I think the real bet for Amazon, because that's really minor compared to Amazon's entire balance sheet and its list of assets, the real bet is to get the best foundational model, right? And there's this race right now to develop AGI or superintelligence. The definition of that is incredibly vague and subjective, but that's what everyone's racing for. That's what Mark Zuckerberg is racing for, because that is sort of the holy grail and seen as the ultimate prize. If you can get there first, then you will have not only the best narrative, but the best technology. And the idea is that customers, consumers, enterprise, et cetera, developers, they're going to come to you. And that's really what I think Amazon is doing with its Anthropic investment. It's trying to sort of partner with the best model out there. And Claude, arguably, of course, is one of the best models out there. But again, for Anthropic, they have choices. They have options. They can partner with many different companies, and they're also receiving money from different companies like an Amazon competitor, Google.
Yeah, but to your point, it's kind of nice to see, I guess, that investors are at least being somewhat discerning as it pertains to rewarding these investments where they're putting the money and trying to make sure that it's done in a smart way. Deirdre, thank you.